Hello. Hi,
Hello,
everybody.
how are you, Jennifer? How you doing?
I'm good. How are you?
I'm doing well. I'm doing well. Thanks for arranging this.
Yes. So welcome everyone to what you need to know in this crazy real estate market. It's a Q&A with Arif Aziz from Univest, and we're here to answer your questions and talk about the market and inform you what's going on and some tips and tricks on how to be successful in this market.
Great.
So I thought I'd
That
start off with some stats. I ran the numbers for the last week, and we've had 150 new listings in the last 7 days, and 210 listings went pending, and 175 listings have closed in Bucks County in just the last week. So the market is on fire, and we're really low on inventory. There's many buyers for each home that's active for sale. And that's kind of why Arif and I wanted to talk to you tonight. We wanted to let you know that there's certain things that need to be in place before you decide to look at homes and purchase a home, because in today's market, it's very competitive, and there's certain things that need to be done in order to be successful. Right, Arif?
absolutely. You're right on, spot on that one. So yeah, let's start. I mean, a lot of times, I mean, I'm with mortgage. Obviously, I do mortgage. I've been doing this for a long time, and I have seen different types of markets and up and down. Obviously, right now, the way as you just mentioned, such a hot market and so many buyers out there looking for a home. Unfortunately, not enough inventory, and homes are just good homes, good houses are just going that fast. And if you're slow in responding to that, unfortunately, you lose out. I mean, that's the thing. And in terms of mortgages, obviously, we see that. I mean, I've got tons of pre-approval as I speak, and I was kind of talking to you the other day about that. And I do hear from these customers, as I follow up with them, saying that unfortunately we lost that house. Fortunately, somebody outbid us. Unfortunately, there's like 4 or 5 different other offers out there. So it's important to understand, first of all, how the market is working right now, and also what you need to know, what you need to do to prepare yourself so you're in a position to make a right bid and actually win that and go into sales and purchase that. So from that standpoint, yes, Jennifer. So let's hear. Let's talk about what some of the things that you're seeing and what we could inform our customers. And hopefully, this is a great informative session, so our borrowers and homeowners can benefit from it.
So the first thing is, actually, we have a question. The first thing is the difference between a pre-approval and a pre-qualification. So definitely in today's market, first of all, you need to be with a seasoned, qualified agent that knows what they're doing and is very knowledgeable about today's market and the stats and what inventory is. The second thing that you need to do is you need to be pre-approved and be with a local lender who knows the market, who is very familiar with the rates, and Arif is that. He's definitely someone who is available to talk to at all times, because this market and most real estate markets happen on a weekend, right, Arif, or a Sunday night. They decide to write an offer, and
Yes.
and you need to be accessible. So that definitely, you're the man. You're definitely the person that I've called at all hours on a weekend and apologized, but you've always gotten back to me. You also are a local lender that has great rates, very competitive. I normally suggest that someone that comes to me and says they have a pre-approval, that they really need to reach out and talk to local lenders, because Arif has been able to help many of my clients knock a point or a half a point off of their interest rate, and even show them different avenues to go through. So I definitely suggest that even if you think you've talked to somebody and you've struck up a relationship and think that they're the person you want to use, it never hurts to get a second opinion, and I would definitely reach out to him. So with that being said, I'll tell you what I think the difference is between a pre-approval and a pre-qualification. And Arif, you can jump in at the end and let me know if I'm right on this. But from my understanding, a pre-qualification is something that was somewhat used a couple of years ago when the market wasn't quite as hot. And that's when you had a conversation with the lender, and they took your information over the phone, and it was just like a quick conversation. They didn't pull your credit. It was just a quick conversation where they thought you would probably qualify to spend X amount of money to purchase a home. And a pre-approval is when you actually furnish them with your information, and they do a hard pull on your credit and determine that, yes, in fact, you are qualified to spend this amount of money. It's like it goes the next step. Right, Arif?
Absolutely, you're right on. So, pre-qualification basically is like Jennifer's talking about. You know, you give information, you have basic information maybe, and then you know, based on what you're saying, that you're a wage earner or your self-employed, this is how much you're reporting your income gross. This is your debt structure, and this is how much assets you have, and they, based on that, just giving you a pre-qualification verbal maybe a lot of times. What I would say, there's two different types of pre-approval though. One is called a credit approval. That basically goes to underwriting all the way. So there are customers who, and it's a great thing actually, there are customers who would say, you know what, I want to make sure that I truly qualify all the way through, and then when I do find that house, I'll just have to provide that address, and they go through the whole process, get an appraisal done. That is a credit approval. That's actually it's even better than pre-approval, right? So pre-approval would basically mean this. You take an application, you pull credit, hard credit, you take the customer's income information, assets, or any reserves, you know, liquid, non-liquid, as well as looking at the credit liabilities and whatnot, and put through the system and see if they qualify. You run what we call a desktop underwriting, and to see if it actually, you know, does work. And if it does, they automatically will tell you, okay, this is some of the conditions you have. This is what you need to provide, and that's a good one. You can take that to the bank. What I mean by that is that once you have this information, go to your realtor, you know, go to Jennifer and say, you know what, I have this from Univest, or I have this from Arif, you know, just take this and I can put an offer in. The reason you want to do the homework ahead of time, because if you don't do that and all of a sudden you find that right house and you have to go back to the lender, and like you mentioned, and sometimes it takes a little time, you know, it may take a day or two, you may lose the house. So you want to do this ahead of time for sure. Yeah. But yes, to your point, you're much better off providing this information ahead of time to the lender. Yes.
Yes, definitely. The other thing that's really important is having a seasoned and qualified agent that has spent time with you, taking like an intake of what is important in your dream home, or what is important in the home that you're looking to find. You know, whether it be you talk about your kids or your pets, or how far away from work you need to be, the proximity to the kids' schools, a school district, if that's important. Do you need a finished basement, a walkout basement? Do you need a pool? So there's a lot of work that needs to be done up front in order to determine what your needs are as a buyer. And once that list is kind of made up, you have like a wish list and you have like a must-have list. And it's important that you know, both members of the family or whomever is making the financial decisions be on that same page, and that the conversation's been had with every decision maker. Because when you find the home, there is no time. There's no time to sleep on it the next day, or I'm going to get back to you in an hour, because homes are literally selling in a matter of hours. Sometimes homes are listed as coming soon, and the homes are selling sight unseen. They're given an offer before they even go active. So it's really important that a lot of work and preparation is done up front, with your financials and with understanding what you want and must have in a home. And I have a form that's probably 6 pages long, and it's something that I can do with clients over the telephone or over Zoom or FaceTime. And it's detailed. And the more information I know and understand, I can, I can pinpoint a home better for them. I understand that they may need to be within an hour drive of work, or they may need to be in a certain elementary school in a school district, or they may need a fenced yard, or it may have to have an in-law suite or a separate entrance out of the basement for whatever reason. So it's important that that information is brought up early in the process, because it can be exhausting to look at homes. It's always fun in the beginning, but it can be exhausting looking at homes when you find the perfect one and it's gone by the time you get back to the office to rate the offer. So I definitely think that that preparation beforehand is very important. And it's extremely important that the pre-approval is done as well, because they go hand in hand. You can't be looking at a property that's worth $50,000 more than your budget. And because then when you're looking at homes, trust me, the homes that are $50,000 less than what you were looking at won't set the bar for you. So it's important that you know from the get-go where your budget is. I'm sorry, I didn't mean to cut you off.
No, I was going to say that, not to interrupt, but that's a great point you just brought up, because, what happens sometimes, as you just mentioned, that, your must-haves, and then, the wish list, all of a sudden you go, go and look for homes, like 4, 5, 6 different homes, and then it gets confusing. And then the seventh money home, that could be the right one, but it happens to be maybe 20,000 more than what you are pre-approved for. So always remember to have that flexibility as a home buyer. So when you ask for pre-approval, have a limit, like a budget. Okay, this is the most I would want to spend, and make sure that you actually within that. That's the thing. And this is the most down payment I have. That's another thing a lot of people don't realize, where you're looking for a house that's $500,000, but you have a down payment, say just $20,000. Understand that. It's okay. You can be at as low as 3% down payment on a home, a conforming loan. But understand, though, that what that means, what that equates to in monthly payment, and then PMI. So all these things will matter. So when you go for that house, so Jennifer, you're showing home, and all of a sudden you find that one house, then you have to go, if you have to go back and say, you know what, I don't know if I can afford this, or that conversation happening, then you may lose an opportunity to put a bid for that.
Right.
That's
so
great.
it's important that you speak to someone. Today's market is crazy. And it's not a market that you can navigate alone. It's a market that you need to be, you need to have a partner. You need to have a financial partner, and you need to have a professional real estate agent that does this and knows the market and can guide you through, because there will be some hiccups along the way. And it's our job to get you into the home and settled, and have it go as smoothly as possible. So one other item that I wanted to bring up is some of the buyers that we're working with have homes to sell. So they're selling and buying, and there is a ton of equity in homes right now, probably the most equity that we've had in homes in a very long time. And it is definitely a seller's market. As I said, there's more buyers than there are sellers, and you can have multiple offers that can go. I've heard some crazy talk of 45 to higher, 45,000 over asking price and higher, and it is hard to navigate that. So it is important that if you're starting the process and you have a home to sell, that you have already been in touch with a lender to talk about the pre-approval aspect, because sometimes credit scores can change if you've purchased a car, or maybe you were late on a credit card payment during COVID, and things shift and change rather quickly. So even if you have, talked to somebody in the last year or so, it is definitely something now that needs to be discussed again before you list your home, to ensure that you are set up right to be able to buy a home. So I just wanted to talk about the amount of equity that you have in your homes now. And there's a lot of different loans out there. There's the FHA and the VA, but Univest does do a bridge loan. So Arif, you want to talk a little bit about that?
Absolutely. Another great point. So as you mentioned, if you are living in a house now, you're a homeowner and you have a lot of equity there. And yes, you're going to sell this property to buy another one. But what if you were to do this? Take some money from the property you're living in now, the equity, and use that towards down payment in the new home. And then when the house sells, you pay it off. That's called a bridge loan. And it's a great way of doing this. So just backtrack a little bit here. I mean, once you know you want to buy a house or you're looking to buy a house, you should know where your down payment is coming from, right? So, what are some of the things? Checking savings, liquid assets, other places, maybe you want to break a CD or whatnot. Non-liquid ones where you have to pay penalty, like if an IRA or a 401k or something like that. If you do that, understand how the process will work if you have to take money from there. Now, one thing here, not to go off track here, but one thing I do want to point out here, because of COVID, there are those investment companies that are allowing you to take money from your IRAs and 401ks without penalty, and you do not have to pay back within that 6-month time period. So that's a good thing. So you can use it. However, if you have equity in the house, that's a great way of doing it. So your house is going to be sold, and you probably put the house in the market as well, but you take the money from the equity and put it in towards your down payment in your house. That's a great way of doing that. So yeah, to your point, absolutely. And you know what? It's pretty simple process. Just like a home equity application, it doesn't take long to get an answer. So you pretty much can do both mortgage applications, the new house, as well as the equity you take out from your existing home simultaneously.
Right. So that's good to know. The other thing I wanted to point out was that first-time home buyers really need to understand how things work and the importance of maybe not going out and buying a car in the middle of the process. It's important actually for everyone to know that. But sometimes when you're a first-time home buyer, there are questions that you have, and it's something that you've never done before, and you kind of are getting, Aunt Susie's input and Grandpa's input and Mom and Dad's input. So it's best to ask all of that, even if you need to have like a Zoom meeting or a FaceTime meeting with the lender and the agent to make sure that, your parents are understanding it or you're explaining it to them, because this market is so hot that when you go back to talk to your mom and dad or parents or whomever it is that maybe is, important in your life that you're sharing that news to, they're inevitably going to tell you how it was when they purchased. And it's very different now. The market is in a much different place. Interest rates are at an all-time low. So it's important that if they're involved in the process, that they're involved kind of from the beginning, and that they understand, and that you're still able to make those decisions rather quickly. So that's one thing I just wanted to point out, because sometimes we come into a lot of questions with first-time home buyers, and they inevitably in a normal market lose out on a couple homes because they're not able to make a decision that quickly. So I just advise that you bring them into the conversation. They don't necessarily have to see the home. That can be done virtually, or maybe they live out of state. But if they have questions, that you bring them to the agent and you bring them to the lender so they can be answered up front before you get into that quick make a decision. Also, to talk about the equity that's in everyone's homes, is I wanted to say that it's a great time to refinance. If you have a loan now where you're in the 4s, you definitely need to take a step back and look at your real estate portfolio, because it is one of the largest things that we own and have equity in. And you need to take a step back and reach out and refinance, because they're at an all-time low, and you can save yourself some money. So if you're not looking to buy or sell, you need to see what your rate's at, right, Arif? And give you a call sooner versus later.
Absolutely. That's a great point. I mean, even if you refinance, I mean, I've had customers who refinance, say, 8 months ago, before all these things happened, and all of a sudden they're looking to do a 15-year, loan, and your rate could be as low as 2.5, 2.65, fixed, no points. I mean, it's just amazing to how much money you could really save by looking into refinancing. There's obviously costs associated with refinancing. So the way I look at it is that you look at the cost and you divide by how much you're saving per month, and see how long it's going to take you to recover that. If you're living in the house longer than that, it's no brainer. A lender, if you call me, I'll to amortize it for you in the current situation you're in, versus your what's a proposed loan is going to look like when you amortize it. And that too is a very simple way of looking at it to see if it makes sense. But in the long run, no doubt about it, you save yourself a ton of money by refinancing. This is that kind of market right now. I do want to kind of touch on one other thing here that you mentioned about parents. If your parents are involved, like say if you're buying a house, you're a first-time home buyer, and you need funds from your parents as gifts, which is very common, happens all the time. Parents, brothers, sisters, whatever. Know that ahead of time. The reason you need to know that ahead of time, how much they're able to give you, because there's a process. These gifts need to be sourced. You just cannot have, say, all of a sudden out of blue, say they know what, okay, yeah, I've got $10,000 here, with me, and here's the money. No, it doesn't work that way. So that needs to be sourced, and then we need to know ahead of time that, okay, this is the money coming from a gift, which is important. And even for confirming a primary home, I mean, all your down payment can be gifts, all of it. There's no restriction there. Secondary home or investment property is different. Some percentage of it need to be your own money. So these are the kind of things, you're going to have questions on if you're a first-time home buyer. So just make sure that you reach out, because ahead of time, give yourself the good, head start in the process, so that, as Jennifer mentioned earlier, that you don't want to be in a situation where you love the house and you really want to go for it, but you have too many questions, or you have too many unanswered questions about the mortgage process.
Yeah, definitely is. It's important to, and no question is stupid either, especially in life, no question is stupid. But when you're purchasing a home, really, the more questions, the better, because that makes sure that you understand what you're doing, and the more questions you ask, you get more guidance and understanding, and you can make decisions easier. Because when it comes down to it, it's a big decision, and it's probably one of the biggest financial decisions you'll make. And you want to make sure that you turned every stone over and understand the process completely, so you can make that decision and get up the next morning and be ready to continue on. I know in the beginning we talked about having multiple offers on homes. It is crazy. There's a lot of things that can be done to help you win the bid. And I'm not going to go into them now. I can't give you my tips and tricks online, or they won't be tips and tricks anymore. But there are a lot of things that can be done to help necessarily sweeten the deal. It doesn't necessarily always come down to cash or the sale price or offering the most money. A lot of times there's other situations and scenarios that go into effect, whether it be the flexibility or a settlement date, things like that. Down money is important. Nowadays, it's really important to look at like the loan to value ratio, because there's so many offers out there that you want to make sure that you have the most qualified buyer buying the home. So I'm going to turn it back to Arif real quick. I know we talked about it a little bit, but it is really important that that down money is strong. Right, Arif?
Absolutely. Yep. You need to make sure that you have it. And not to mention, a lot of people forget this one other thing. There's something called closing cost. You have to have the money as well. So yeah, you have the down payment. Yeah, say whatever amount, 20,000, 30,000 or 40,000 you have, but then you forgot the closing cost. There are closing costs associated with financing purchase mortgage. So you're talking about title insurance, the appraisal, all the other ancillary stuff that need to be there as well. Taxes and insurance, property tax and insurance are escrowed. If you're escrowing them, you have to have enough money to put that towards the closing costs, where you have to have that extra money to make sure that you have it at closing. Typically, 2-3 months of taxes are taken from the by the lender. Homeowners insurance need to be paid or show it's paid in a binder. So all these things will add up. So you want to make sure that you know that ahead of time and plan it accordingly and know where your budget falls. So back to you on that one, Jennifer. But that's a great point you brought up, and it's important. I've had situations where first-time homebuyers say, "Yeah, I didn't realize that I need to have that extra money there, and I don't have it." So we have to now recalibrate the whole loan, maybe put less down payment and all that stuff because of just they weren't aware of that, or they weren't ready with it.
Yeah. And it's definitely a market where seller assist is not looked at favorably because prices are traditionally the homes are selling above asking price, and in some cases quite a bit above asking price. And then you have the problem with appraisals. Will the house appraise for the value that it was sold for? And if you're adding in seller assist on top of an already escalated sale price, it gets very dicey. And if something doesn't appraise, then, does the seller reduce the price of the home, or is the buyer going to bring cash to the table? And in today's market, when there may be 10 or 12 or 20 other offers on a house, the seller's not reducing the price of the house. There's 19 other people that put an offer in and they would want it. And maybe some of them are bringing cash to the table. So it definitely is, it's a process. There's a lot of information that needs to be known. And we're both here to help you in any way that we can. So I don't really have anything else, Arif. I think we've answered a bunch of the questions that have come in. I did want to give a little plug. Next Wednesday, September 2nd, Arif and I are doing a community giveaway with Agents Advise, and it's 11 to 4 p.m. All you have to do is text me between 11 and 4, and you'll be entered to win a Roomba. So we did one a couple months ago. We did a Yeti cooler, which was a great turnout. So this time we're going to try a Roomba and see how popular that is. And again, that's September 2nd from 11 to 4. You just need to text me. You can find all my information on Facebook, Jennifer DeLawter Realtor, and peruse the page and you'll see the giveaways and the links and my phone number and so forth. You'll see Arif's information as well. And then the last item I wanted to talk about was I am doing a community food truck in Dublin on September 10th, Scratch Kitchen. They have great tacos, really yummy food. They're coming from 5 to 7 p.m. at Saddlebrook Drive in Dublin. And there will be a link that they would like you to pre-order. So there's some social distancing and they'll give you like a time slot to pick up your food. So I just wanted to mention those two things. Arif, do you have anything else to add?
No, it's a great discussion. I mean, those questions were great, and I'm glad that we're able to actually have this conversation to clarify. I mean, again, there's never been two different mortgages, two different owners in the same situation. So every situation is going to be unique, right? In terms of mortgage, and as well as purchasing. So all I ask is give yourself the time, know everything at a time. I'm here, Jennifer is there to answer any questions. Consultation is free, and just pick up the phone and just call and find this information. And the more aware and more better, answer your better information you have, more information you have, the better equipped you are in terms of going to the market to make your bid for the house. That's a great discussion. Thank you. Yeah.
Well, thank you so much, Arif. Thank you, everybody, for logging in, and I wish you all health and wellness and happy start of school. So I'll talk to you soon. Thank you.
Well, talk to you later. Good night.
Bye. Good night.